Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
All right, so we've seen lately a lot of times people are a little more leery of real estate because rates are higher, because there's been some issues with debt and capital calls and other things like that. So, what are the other businesses that you can do to fire yourself, right? Like that book I wrote. We are doing something in the car wash space. This friend of mine, Matt Fore, is just great at talking about why car washes, why they're great, why mobile home parks, why some of these other investments are great. And I'm a big fan of private equity type deals. And in this interview, we talk about it. What's the benefit to continue to look at these type of cash flowing deals when real estate has gotten a little more challenging? Not that I don't love real estate or doesn't love real estate. It's just that right now there are deals that just, maybe they have little debt or no debt, and it's just much easier to get done, and they cash flow, which is huge because when you have a deal that cash flows, it reduces your risk. And it just, anyway, so we get into this in a minute, and I'm just really excited for this interview with Matt Fore. He's a great guy. You're going to love what he has to share. Let's jump in. All right, welcome, Matt. Good to have you today on the Mailbox Money Show.
Yeah, thanks for having me. Excited to be
Hey,
here.
love it, man. I love your, we're going to talk today about side hustle real estate and really something that's familiar to me of, kind of like doing something while having another job or having a job. And for a lot of people, that's kind of the case, right? We'll start out doing something because it's like, I want to get into this, but you've not only gotten into it, you've got a huge, 4,000, multifamily units, mobile home parks. You've raised a lot of capital. I was on your show called the Ice Cream with Investors, which is just a great name. And anyway, it's just fun. So tell us a little bit about your story, how you got started in real estate, what you're doing, full time, and why side hustle, and just give us the whole story there.
Yeah, sure. So I'm based out here in Nashville, Tennessee. Bronson, my real estate career started back in 2016. I was working in technology sales at the time, and we had landed a net new customer, a $10 million account, and my eyes were just wide open with the commission check that I was going to receive. And I grew up in a really small town in East Tennessee. I've never really cared about like nice houses, watches, cars, boats, things like that. So I was looking for ways to like invest this money. And I heard everything from crypto to bonds to annuities. And then I had a mentor at the time that was like, "Hey, you should look into this real estate thing." He owned 3 properties free and clear in the Nashville area. They were appreciating like mad because Nashville's been a crazy market here. They were cash flowing, and he's like, "Hey, I get some tax benefits along the way." Well, then I got the call from my VP the week of Christmas that said I was not going to receive that check, that it was only going to receive 2 cents on the dollar. And when I asked him, like, "Hey, how did you come up with this money? Like, what happened here?" And he was like, "Matt, how much money have you made this year?" And I said the number, and he said, "Well, isn't that enough? Haven't you made enough?" And it was at that point that I
Oh
realized,
my
like, hey, if I
gosh.
want to achieve the goals I have in my life and pursue financial independence and freedom, I was going to have to find a different path, which that path led me. I was already down this real estate rabbit hole. So it led me to Rich Dad, Poor Dad, which led me to Bigger Pockets, which led me to my first property. So that's kind of how I got into it.
So let's back up here a second, because I'm a sales guy, and just making that makes my blood boil hearing that story, right? So this guy, so you're going to make, and I mean, do you feel comfortable sharing how much that check was going to be?
I've never said it on a podcast, so
Okay.
I'll refrain from saying it, but I will say it was nearly 7 figures. I mean, it
Okay.
was
A
it was
lot of
life
money.
changing for me at the time.
Yeah. And this was written in your contract that this is what you would get paid.
That's right.
And did you think about taking legal action or anything? Like, hey,
So
like,
the
uh,
the problem is you've worked in sales jobs too. When you
yeah.
work for these larger corporations, they always have these clauses in there that like, hey, at any time, at any point, we can change your comp structure, change your commission check, all those sorts of things. And my frustration was like I'd worked with bigger companies in the past, and I'm like, hey, we should take a look at this and let me justify what we did here so that you will understand better the situation, not just look at it in a spreadsheet. And my boss at the time was like, "No, no, no, you're in an acquisition role. This is what we want you to do. We want to have these big payouts so we can post you up on our screens and like get everybody else motivated." And yeah, then I got the call that said, "Nope, that's not going to happen."
Oh man, that's heartbreaking. I've heard stories of this too. People working, some people don't know my background, but I worked in medical device sales for 10 years and got paid well. It was good. But I know there were stories of like I know a guy that worked in pharma, so pharmaceutical sales, and he was laid off. They have constantly they're hiring people and they're laying people off. So he got laid off and he had something like a it was like a $20,000 check that he was supposed to get. but like before it was paid, he was laid off. And in the 100-page employee manual, it said you must be employed at the time a bonus is distributed. I mean, it's just stuff that's like you earn the money, but like you're
Right.
not gonna. And it's just so frustrating. But hence the reason for fire yourself, right? To like find a way, to make money outside of a job, right? Because then you
That's
can
right.
control it. And whether you keep working or not, like we have a lot of people that continue to keep working because they enjoy what they do, but they are able to have the freedom to leave or to do things how they want, if they want to. So that's amazing. So to get into, I kind of, sorry, I didn't stop listening. I just kind of, when you kind of got into that, I was like, oh my gosh. But so you got into real estate. Did you start initially with single family, or did you start like, can you show that again, what you did and kind of how you scaled up?
Yeah, just like most people, I started on the single family side more as an active investor. So I bought a property literally 3 months after that. And I remember the $42,000 down payment I had at the time. A lot of my friends and my parents and my family were like, "Hey, what are you doing? Didn't you see what happened in 2008? Real estate's risky, all this kind of stuff." And I'm like, yeah, but I just tried to play it the safe route and ended up losing way more than $42,000. So for me, if I end up failing in this process, I will have gotten more than an MBA would have taught me. I'll learn financial underwriting, I'll learn management skills, I'll learn like how to evaluate markets, all those sorts of things. So it was worth the risk for me. So I started with single family, kind of grew my portfolio over the next couple of years doing burrs, flips, things like that, and just got to a point where I ran into a scale issue where I just started seeing like, hey, one property has an HVAC unit issue. That knocks out your cash flow for the entire year on that property. So if you
Yeah.
truly are trying to build this income stream, then you're going to have to find a different way to do it. And that's what led me into passive investing and then ultimately joining up on the GP side.
Yeah, yeah, it's amazing how with real estate and bigger deals, there's different ways you can participate. You can be a capital raiser, like you and I, we raise capital for stuff. You could be someone who passively invests, which we've both done as well. And so somebody who is like a couple of these physicians I worked with that were making over $2 million a year, they are just super busy. So they may not want to go buy a building themselves, operate it, deal with a manager or deal with tenants or any of that stuff, but they can passively invest, which is really great. Where it talks about like the name of the show, the mailbox money ideas. Another thing that we have in common, you and I, we're both mindset people, and we both do kind of some extreme athletic stuff. Yours is a little more extreme than mine. You do triathlons. Are you doing the full Ironman? Or are you doing I mean, a regular triathlon is still crazy insane, but like, tell us about triathlons and how'd you get started in that, and how did you feel like that? Just talk to us about that a little bit.
Yeah, I played sports growing up as a kid. So, like, as I ventured out of intramurals in college and then the post college, like you're playing at the local sports leagues and things like that, I was always looking for a way to continue to compete. And one thing I love to do is just find my limits, whether it's physically, emotionally, mentally, spiritually, whatever that is. I just want to kind of try to find these limits in my life and see what's going to happen to me when I'm in that zone of uncomfort. So it started off with a couple marathons, and I'm like, okay, what's next? And that's when the Ironman and going to Hawaii and all those sorts of things kind of got in my mind. And did my first triathlon in 2014, a full Ironman. Just for our listeners out there, that's a 2.4 mile swim, 112-mile bike, 26.2 mile run. Yes, it's all in a single day. Yes, it's all in a single event. I just like punishment, I guess. But one thing that really drove me to the sport and continue to do the sport is the fact that someone said early in my journey, it's like it never gets easier. You just get faster. And what that really means is like after you've done one, you know you could do it, but you're trying to get a little bit faster. And every time you get a little bit faster, you find that point of breaking point and that humility because your body can only do so much. So it's just this constant evolution of like, can I shave off a few minutes? Can I shave off a few seconds? What if I did this different? All those sorts of things that led it to be an addiction in my life, basically.
Yeah, it's amazing. I mean, people ask what element, I cold plunge this morning at 35 degrees for 5.5 minutes, or I may do a little run later. Or when I was in New Zealand recently and I did a 20-mile run, and that was the longest run I've ever done. But it just does something for you, right? It's like you did it, you accomplished it. And it's amazing how, mindset or breakthrough in like one area can lead to like a breakthrough in another area. The thing that I mean, it's, to do multifamily investing and, to get 4,000 units of different types and to raise millions of dollars. That's not easy, right? There's not like, oh, here's just everybody's doing it. Why not do it? It's like that's challenging to do. But when you do things
Yeah.
that seem impossible, right? There's kind of like you almost like bust through a lid that you thought you had. You're like, I can run, a marathon and bike 100 miles and do this, like do all these things. And still like, so it just, and then we were talking about this too. My book came out recently. I think you said you're working on some writing as well. Can you talk about what you're working on and kind of any mindset stuff related to that?
Yeah, a couple things. One, so the book's called The True ROI, Return on Intentionality. So we live in the social media world where everybody's like, "Oh, I got 4,000 units, I've got this, I've got that." But no one really talks about like how is that servicing you though? Are you being intentional with the income streams that you built? Because if all you're doing is going and working from 8 hours to working 20 hours, then you're not leaving time for your hobbies, for your passions, for the reason that you were put on this earth, for connecting with your family, all those sorts of things. So it's really trying to reshape the mindset around I build passive income streams so that I can, and then you fill in the blank. I know what mine is, but I think it's important that we have the intentionality behind what we're doing and why we're doing it. You know as well as I do, writing a book is a daunting process. I thought it was going to be a lot easier. Um, from everything to getting your ideas out on paper to making sure you're using the right words to outlines to I'm sure you're a perfectionist. I'm a little bit of a perfectionist as well. I've rewritten the same chapter probably 50 different times.
Wow.
But the one thing that writing a book, Ironman, and investing all have in common, I think, is this idea of you don't do it all in a day. You're not going to sit down and write an entire book in a day. You're not going to build your zero to whatever your financial freedom number is in a single investment. You're not going to finish an Ironman because you did one epic day of training. It's this idea of having a goal that you've got in your mind and setting forth consistent actions every day to get
Yeah.
there. And so for the investment side of things, it might be like underwriting a deal every single day, connecting with an investor or a partner every single day, looking at different investments, reading a book, listening to a podcast, whatever that consistent action is that you can do every day, start with a 5-minute task and then just build on from there.
Yeah, that's it. I mean, it really is amazing how just by starting, getting started towards your goal. I mean, it's just amazing what happens. People ask you, how did I write a book? I mean, I think right, we read a chapter 20 times. That's pretty amazing. I just try to get it done. So I wrote the outline on a trip to Patagonia, Chile on the plane. So here's the chapters that I'm going to write. So I just kind of, okay, what are the chapters, whatever, came up with 10 chapters, whatever. And then on the way back, I kind of just thought about it. And I think I heard somebody doing this where you take 60 minutes like on the timer and you do it, 5 days a week, you just write for an hour. And then when the timer goes up, you just finish up and you're done. And I would get about 1,000 to 1,200 words done. And within a couple months, I basically had most of the book done, right? So it's just amazing how it's not, it is hard to write a book, but it's like the harder part is not writing the book, it's creating the space to write the book, right? It's like saying, oh, well, like, so I would just find that time on the calendar each day that would go and that would be sacred time. And then I would just do it. And so, but if you don't create that, but that's the hard thing when you're working, it's hard to create that time. If you have young kids, it's hard. There's things it's hard to do, but yeah, that's really cool. And I love that you are doing that, and I'm sure it will benefit a lot. It's a very clarifying process as well. I think everybody should write a book because it clarifies your thoughts on things, and then it really makes you an authority. The word authority has a word, or the word author, has it can be created, the word authority from that. So if you author something, you kind of are an authority in that. So let's talk a little bit about the market right now. Obviously, it's a challenging time for a lot of investors. We're seeing, there's capital calls going on. There's situations with value add stuff. What are you seeing in the market? And do you still feel like it's a good time for real estate, or do you think it's good to take a pause? Or what are some things that you're seeing right now?
First thing I would say is it's always a good time for real estate. I mean, if you look historically, real estate in the United States has gone up into the right over the course of the long term, with few blips in between. So I think that the only way you really lose money in real estate is if you're forced to sell for one reason or another. balloon payment comes up, cash strapped, and running poor cash flow, or you've got some other big liquid event in your personal economy where you need to liquidate. If you don't have one of those three events coming up and you can just hold on to the property, chances are every property in America is worth more today than it was 100 years ago. So in the book, like I use the Empire State Building as an example. Like it was built for 32 million and then it sold for like 30 million, but then the last trade it had was for 2 point something billion. So
Yeah.
just a perfect example of over 60 years that thing has appreciated massively.
Wow.
Um, so I think one of the things we're seeing though is back in 2019, we saw a little bit of froth in the value add, quote unquote, space. So this idea that you would go pump a bunch of millions of dollars of capex into some 1970s buildings and then sell them for a higher valuation. It just so happens when the Fed dropped their rates and money float was everywhere in 2020 through 2022 that thesis played out. So we shifted our portfolio to where we wanted to own quality assets with low operating expenses. That's what got us into more like Class A apartment complexes and
Mhm.
car washes. But now we're starting to see that shift again to where, hey, does it make sense to go out there and find these value add opportunities? Which essentially has led us to the mobile home park space. Our underlying thesis over the next 5 years is that more people will be looking for affordable housing, and supply in the mobile home park space is going down versus up. So it's just a good economic position to be in if you have more people in demand coming towards your product and less supply of that product on the market. So happy to talk through and pick through any of those asset classes or kind of what we're thinking there, but that's kind of our thesis from 2023 to essentially 2025 here.
Yeah, no, that's good. I think that's very wise. And yeah, what asset classes are you like maybe that's one or two that you're really excited about that you're like, we think this, I mean, obviously there's many, you've got many different assets within real estate, but what are a couple that you're excited about?
Yeah, I love that you said many different assets in real estate. When I first started, I thought all you could do was like flip homes or buy a turnkey property. I had
Right.
no idea that like people buy and sell parking lots, for instance.
Yeah.
So it's been a fun journey for me to kind of learn this space as well. But I'd say two that we're still very bullish on, mobile home parks for the reasons that I mentioned, and car washes. So if you don't know much about that space, it's highly fragmented, meaning that there are mom and pop owners everywhere. The number one market share leader in that space owns 4% market share. And when I converse that with like soda drinks, it's, 46% Coke and 48% Pepsi, and the remaining 4% is mom and pop owners.
Mhm.
So we believe that over the next 5 years, there's going to be a mass consolidation in that industry. Private equity, sovereign wealth funds will come in and want to consolidate the industry to do basically have alignment of synergies, which we've seen across a number of different industries from med device to pharma to technology. So it's the playbook's already happened. It just hasn't happened in this space. So when that happens, we want to be in a position where we'll have a big enough portfolio where we'll get a call. And when you have a bunch of money trying to consolidate an industry quickly, they typically overpay for assets. We want to be in that position where we're selling our assets at an overpriced multiple.
Yeah, that's great. No, it's interesting. We've done a lot with car washes. I like the private equity roll-up strategy where you buy business or build businesses and then you sell them at a higher multiple in the future. It's amazing just the value of putting that together. Do you wonder, this is something I've been wondering about car washes specifically. Do you think that there will be a point that, it seems like, a car wash used to be like a $5 thing and now it's like $20 or it's, there's all these memberships. There's a lot of them popping up. Do you think there could be an issue in the future of kind of oversupply, or that there's so much, and because private equity has bought some car washes at 20x multiples, that everybody's thinking this is going to happen and that it maybe doesn't happen the way they want, or almost like the EV market where 5 years ago there weren't a lot of electric vehicles and now everybody has an electric vehicle, right? And so it's like a lot of companies are stopping to make electric vehicles now. So do you think there's any like risk of that?
Yes, in short, yes. And I think there's risk with any investment you do. Two things that have us feel like we're still in a good position is one, car ownership is at the highest it's ever been in our country. And most of those assets were purchased from 2020 to 2023. Now, for most Americans, the car is either the number one asset, expensive asset they own, or the number two. So our thought process is if like you own that type of an asset and you just bought it, chances are you want to keep it well maintained, at least for the first 5 years or so.
Right.
The second thing is our subscriptions range from 19.99 a month all the way up to $50. And we believe that that is right in the Netflix sweet spot.
Yeah.
Meaning, if a recession happens and somebody's going to cut ties somewhere and cut cost, chances are they're going to say, we probably don't need to do that vacation. We probably don't need to do that anniversary dinner that's going to cost us $200, $250, something like that. They're probably not going to work their way down the subscription stack and say, hey, boy, we could really make a dent if we just cut this $25 expense per month out of our expenses.
Yeah.
The last thing I would say on the overbought, I get this question a lot. You definitely are seeing way more car washes now than you have in the past. I think one, it's because I'm more cognizant of the asset class, so I pay attention
Right.
to it more.
Yeah.
And two, there is a lot of building going on. But every data point we see from the National Car Wash Association says that they don't project a full build out to this industry at this pace until into the 2030s. So it's going to be more market dependent, I think. If you're in a high saturated market where there's a Starbucks across from another Starbucks, like a car wash across from a
Yeah.
car wash,
Right.
yeah, I mean potentially you could be hurt there. But if you're in good and growing markets where you've working with an operator that's looking at like permits and the new development cycles and those sorts of things, then you can find the right niche to carve out in this space.
Yeah, that's a good word. No, I think it's true. That's why, I think continuing to look for opportunities and like you said, there's always risk in any investment. But once private equity, I think it was several years ago, started paying 20x multiples or higher, or 25x for car washes, it was like, wow. But the amazing thing, and I just went to an event in Texas last weekend, and it was about mergers and acquisitions. And it was basically just about like buying smaller businesses or having smaller businesses, packaging them up and putting them in a larger thing. And often small businesses will sell, 3 to 10 times earnings, but then when they're packaged and they're kind of, integrated the right way, and maybe it's a franchise or some kind of way you scale them up, you can sell them for, 20x times earnings. And it's simply the value of putting something together. And Wall Street just likes buying bigger stuff, and it makes sense. They don't want to deal with a bunch of small stuff. They'd rather have 500 million and whatever, and something they can scale and then build it bigger. But it is really interesting. Are there any other things in kind of that private equity space you guys are looking at, or anything?
Yeah, two points I would make there is one, I tend to agree that if you're going to go wash your car, you're not going to drive 10 miles away from your house when there are 4 locations within 3 miles, for example. So we're really looking at that 3 to 5 mile radius when we go buy locations to make sure there's no permitting going on to build new developments and there's not oversaturation there. But with our portfolio now, we can start running like a subscription service across our brands. So, not that this happens often, but if you're in Virginia and you have a subscription with us, and now all of a sudden you're in South Carolina and just need to wash your car because of one thing or another, you would be able to do that. That's kind of our long-term goal, is to concentrate ourselves in a, a few key states where some of that travel would happen natively and people could wash their cars from one location to another. The second point I would mention there is that we see a lot of cost synergies with our ability to buy chemicals. So first and foremost, if you only own 1 or 2 car washes, you probably don't, unless you have specialized background, understand the right chemical mix um, to put into your washes to make them the most efficient. We have some of that natively in our staff. We've kind of built our team that way. And second, we can go to some of these chemical contractors now, since we're a top 20 car wash provider in the country, and say, hey, we want better terms. And either you provide us those terms or we'll go to one of your competitors. If we're a mom and pop that owns 2 locations, they might say, that's cute. We're willing to sacrifice the business. At our level now, they're starting to say, okay, well, we'll negotiate. And we've seen some cost efficiencies there.
Yeah, no, it's amazing. You want to, if you like, it's a great position to be in, right? You've got so many locations, you got 20 locations or whatever, and you're able to say, hey, I've got this, and these guys are offering. You can kind of play them against each other and find out who will really offer you what, and it's really amazing. But it is really cool to see some of the innovation happening in the car wash space lately, and then with other businesses as well. What's something that you wish you had known sooner about investing?
Um, well, two things. One, I think that when I first started, I was doing it by myself. And I knew this concept of you needed a team. I didn't understand what that really meant or how much partnerships mattered when you're trying to do bigger things. So when I first bought my first rental, it was me buying it, me showing the property, me being the property manager when there were issues, me calling around and figuring all that out. As I scaled, I realized that property managers make a difference. Having the right contractors make a difference. Having a good CPA firm makes a difference, those sorts of things. So if you're listening to this now, and even if you just want to passively invest, I would encourage you to reach out to Bronson or myself and start building that team for you, so that you can scale and you can diversify and all those sorts of things. The second thing is this is the first time in my career that I've seen where the Fed funds rate is above zero, essentially, right? Like I graduated college in 2008, so I'm still a little bit younger, I guess, but money has been free essentially until
Yeah.
2017 when the Fed
Okay.
tantrum happened, and then it dropped back down to zero quickly afterwards.
Yeah.
So I think for the first time, I understand this idea of money having a cost and the
Yeah.
premium you need to pay on a treasury, for instance, if you want to attract investors and do good deals and those sorts of things. So it's been a fun learning experience for me. I knew it from a cognitive level, but this is the first time like kind of experiencing it. So it's been interesting.
That's awesome. I think I've asked you a couple questions. You said, well, I got two things. Yeah, like two
Yeah, yeah,
things.
sorry.
It's good to have two things. Um, that's good. That's a good word, man. What kind of as we wrap up here, what's a book or like a piece of advice maybe that you'd give to new people starting out in real estate?
It's not even a real estate book. The book I recommend the most and the book I gifted the most in my career is called The Last Lecture. And if you're
Oh.
not familiar with the story, whenever you're in academia and you're a professor, when you retire, you give a last lecture. And it's like,
Mhm.
hey, here's a funny story. Remember that time Bronson heated up the salmon in the microwave? Ha ha ha. But then it kind of goes into this idea of like you're passing down your last lecture. Like, I'm retiring. Here are the lessons I learned. Well, this guy, Dr. Randy Posh, wrote the last lecture because he has terminal cancer. He's going to
Mhm.
die. And so it's a good book around like, here are the lessons I've learned through my life. Don't feel sorry for me. I've got to achieve every goal I've ever achieved. And oh, by the way, this last lecture is not meant for you students. It's meant for my kids. He has two young
Wow.
kids who are under the age of
Uh,
5. I think they died before they were 5. So if you're not much of if you're a reader, it's a great book. If you're not much of a reader, I would highly encourage you to go watch the last lecture on YouTube. It'll make you laugh. It'll make you cry. It'll leave you inspired. All around great book.
So it's a book, but it's also it's online as well. You can that's cool. I'm gonna look it up and look it up right now. Make sure I don't forget it. That's awesome. I'll check it out. The last lecture. Okay, I think I got it here. Amazing. I love book recommends like that. Awesome, man. Well, appreciate what you're doing, brother. I love how you're bringing value. I love how you created a side hustle that's become this huge thing that you is led you to a lot more freedom and the ability to help a lot of people and pursue your passions. And you're doing triathlons and you're all kinds of other stuff, which is great. So congrats on all your achievement and writing a book as well. People say at the end of my time and you're doing it all, man. So how can people get in touch with you and follow what you're doing?
Yeah, so the best place is I host a podcast called Ice Cream with Investors. We bring on all different people from the real estate niches to teach you how you can have your money working harder for you than you do for it. So if you're interested, go check us out on any podcasting platform out there. The next place is nextlevelincome.com. You'll see a button in the top right corner that says invest. That invest button will take you to my calendar. So nextlevelincome.com, the invest button in the top right corner will take you to my calendar.
Awesome, brother. Good to have you, man. Thanks.
Yeah, thanks for having me.
All right, I love this interview. I loved a lot of things about this interview. One of the things I love the most is that Matt is a person who's into personal growth. And I'm just so, it doesn't really matter who you are, where you are. If you're growing as a person, then you are going to, you're becoming a better version of yourself, right? Whether that's physically and running triathlons or like I run Spartan races or do cold plunging, or you're writing books, you're achieving your goals, whatever the thing is, you're growing. And I have this theory that if you're not growing, you're actually dying, right? Our body just doesn't stay in limbo. We're aging, we're getting older. It doesn't mean we have to kind of just be decaying. We can actually be getting stronger, we can getting smarter, we can achieve our goals, do the things we want to do. And I want to be around people like Matt because they're doing it. So I hope this inspires you to take time, if you have a book in you, to write a book, to really, go for your dreams, do the things you're here to do, and be, involved in some of these things that develop passive income, because they allow for more freedom of time for you to pursue the things that you're here to do, those causes, those things that you want. For me, one of my big whys is to end modern day human slavery in the world. So that's really what I'm pushing for and what I want. So be clear on what you want, and it will help you to create goals and a path to get there. So thanks for taking the time to educate yourself. We'll look forward to seeing you on the next episode of the Mailbox Money Show.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.